a new income tax bill is presented. The important point is that nothing much is likely to happen at least till next year. The Finance Minister Nirmala Sitharaman presented the new income tax bill, which is called the Income Tax Bill 2025, in the Parliament on Thursday. The minister also asked the Lok Sabha Speaker to create a standing committee that will review the newly tabled income tax bill according to the business standard. The new bill may also take some time to be passed in Parliament, as it will be sent for review by the committee, and then a few more hoops, all of which are important. So the new law is likely to take effect only from April 1st, 2026. The shrunken version of the IT Act has no major changes and aims to simplify the tax system by using clear language, removing unnecessary clause, and expanding the definition of income. To understand how we should be interpreting this new law, particularly in terms of its applicability and practicality right now, I reached out to Chartered Accountant Ajay Rotti of Tax Compass, and I began by asking him what was the significant development, if any.
New income tax bill, no doubt there are changes. There are some changes, but it is more of the same thing. And the reason is it was a stated objective. The FM was very clear that there's not going to be a fundamental change in the way tax works or the structure. And it is more of simplification of the language, cutting out sections which are redundant and cutting it in size and making it simpler, etc. So there was never a attempt to change anything drastically. Like we had discussed the last time you and I spoke, I don't think I expected anything big to be changing. And to that extent, it's on the same line. A lot of the language, a lot of sections continue from what it used to be with minor changes. Of course, some of those minor changes are important changes, which does simplify the language a bit. Some sections have moved into a table, etc. As with every other thing, this comes with its own plus and minuses, and we'll have to see once it settles down. Some of it could create new issues which don't exist today. We can't rule that out. Let's see what the select committee is going to do. They're going to, I'm sure, hear people, take some inputs in what final shape it would come out. But on a few counts, it is, I would say, it's not changing anything very radically. The old jurisprudence should continue. Some of the old settled principles should continue. To that extent, it is new and it is a bit old, like you said.
So give me an instance of something where you feel that while there has been an attempt to simplify, it's not maybe working exactly like that, or maybe it's having the reverse effect.
So let me take something very simple and which people will be able to relate to without getting into too technical details on sections. Now, we had multiple payments which were subject to TDS. Now, if you received interest from a bank who do TDS at 10%, professional fees, if we received, the company paying it would deduct at 2%, dividends would be a different rate, different section, etc. Therefore, there was a plethora of sections, to be technical, from 194 going up to 194R. So there were 15, 20 sections which said if it is this kind of payment, 2%, if this kind of payment, 5%, commission, 10%, so on. What they have done is they have clubbed that entire list into a table and put it into one section. Now the table has different rows to say if it is rent, X percentage, commission, Y percentage, etc.
That sounds like good news.
It is, but it's not gone the whole distance with. Because one thing they could have done is done away with 10 rows, done away with 5%, 2%, 8%, 6%, whatever, and 15%. They could have just said all of them will be or club 3-4 categories, etc. So while there is a bit of simplification to put it into one section and into a table, but when you're doing something like this, you could have gone the whole hog, number one.
But was changing of rates part of the remit of this whole exercise?
It was not, but here, remember, the TDS is not a tax rate. It is just a deduction and it's an advance collection. So it does not technically impact your tax collections. Either you end up refunding if it's more, or if it's less, the recipient pays the taxes. So it does not impact the collections as in the revenue targets. It may impact cash collections. So there are one or two things like this where they could have probably gone a little further, even in simplification. And some of the issues which were there on interpretation, for example, it was there as an explanation or a proviso, to use a technical term. They have now said that those are gone, but those have come in as a subsection or a note below this table and things like that. So it's sort of, yes, a bit of simplification, but some of the legacy issues may still continue.
The bill itself has shrunk. I mean, the number of pages has definitely come down by about 200 or so, right?
See, that was expected. And I'll take an example again, COVID. While the current Income Tax Act was there were a few sections like 80 HHE, HHC, and I'll tell you what they were for. They were export benefits for which had long gone. 2011, some of them were gone, some of them were gone 2015, but they were there still in the statute. And the subsection said nothing in this section shall apply after a particular date. So while there were 800 odd sections, there were a lot of sections which were in the statute but had no place, nothing they were doing. So now they've cleaned that. So you could have taken out these omitted sections long back. It does not make a difference. We were never reading that. Those were never applicable. Yes, there is a number thing that it reduces in size, but those were anyway not relevant even earlier.
Right. So, what's the one, let's say, refreshing part that you've taken away from this, which suggests that directionally we are maybe headed in the right direction?
It may sound a little bit contradictory, but I think we've not done too many changes. That's one good bit because we don't disturb everything completely in the desire to simplify things. So the overall structure remains the same. The overall arrangement of the sections is a little changed, but not too drastically. They have a saving provision for all the circulars, notifications, clarifications issued under the old act. So in all that, it is good, but there will be some problems with two parallel acts running for a few years. Notices coming under the old act and under the new act, because the bill says that this will apply only for tax years after 1st April 2026. So before that, the 1961 Act continues. The last point, and I think this is the most important change, is this whole concept of assessment year was very alien. When I talk to foreign tax heads, global tax heads, they just couldn't understand this concept of assessment year, financial year, and why do we call it assessment year, which is a year ahead of the tax year. That's completely proposed to be done away with. In my view, that's the single biggest change, not really all other things. That changes a lot, eases compliance, eases some bit of understanding, reduces a bit of confusion. Overall, I think there are a few good takeaways, but we could have done a lot better, as with anything else.
And we still have time because this is now going to go to a committee. A committee may give some recommendations which may be along these lines, or
the committee could consider some of the inputs. And we have a lot of time now because, it's the first day of the next session. And whenever the fifth session, the monsoon session starts, we'll have to wait until then. It also depends on what the remit of the committee will be, because if you heard said, the speaker can decide what contours of the committee will be. That will be the thing that we will have to watch out for. One thing that still continues to bother me is there's a lot of change that the department will have to do to their systems, IT systems, their websites, their forms, the way it is working, because all section numbers have changed.
Ajay, always a pleasure speaking with you. Thank you so much.
Thank you, Govind.